and this is the market recap for week 7. We'll be talking about how new cash relief is available for Sydney siders facing an extended lockdown. Australia's interest rates remain at a record low of 0.1%, and the EU fines German car makers over $1.3 billion over emission collusion. This week, Scott Morrison is preparing a $1.4 billion cash lifeline support package as a part of a COVID disaster relief assistance to thousands of families and more businesses to support amid fears of a protracted lockdown in New South Wales. This is a part of a national policy and will not be state-specific. Fears are thousands of jobs could be lost across the state as many businesses remain unable to trade as Greater Sydney's lockdown was stretched for another week until July 16th, causing an economic blow to many businesses. In June, the federal government confirmed new $325 or $500 emergency payments for individuals in COVID hotspots who proved they had less than $10,000 worth of assets. However, easing the access requirements when the lockdown extended into the third week. Labor leader Anthony Albanese said the crisis was a direct result of government inaction as the vaccine rollout failed to meet initial estimates and states a requirement for more advertising to encourage individuals to get vaccinated. Also this week, Australia's interest rate remains at a record low 0.1%. Australia's official interest rate will remain at hold at a historic low level, but a rise might be on the financial horizon. The central bank slashed interest rates to 0.1% in November 2020 as a way of easing the potential economic pain brought by the 2019 COVID pandemic. In February 2020, prior to the true impact of the virus being known, Australia's official cash rate was 0.75%, and over the past 12 months, Australia's economic activity has recovered to the pre-pandemic levels and grown 1.1%, showing interest rate cuts seem to have worked. Unemployment is at its 13-year high at just 5.1%. Treasurer Josh Frydenberg stated, indeed, Australia, ahead of many other advanced economies in the world, has seen more people in the workforce than before the pandemic. However, our continued economic recovery will continue to depend on our effective response to COVID. Many economists predict the historically low economic rates will begin to tick up as early as late 2022. The European Union has headed down $1.3 billion in fines to 4 major German car manufacturers, BMW, VW, Audi, and Porsche, saying they colluded to limit development and rollout of car emission control systems. The EU antitrust chief says car makers avoided competition and denied consumers the chance to buy less polluting cars. BMW commented that this underlies that there has never been any allegation of unlawful manipulation of emission control systems by the BMW Group. The case was not directly linked to the past Volkswagen scandal, where the company admitted to about 11 million diesel vehicles worldwide being fitted with deceptive software. And that's all for this week. Have a good week.